here at the Sandbox, as well as our partners like the Georgian Angel Network, believe that through shared knowledge and experience, we can strengthen the business community. And as such, the Experts in Residence program will be providing you with access to top-notch perspectives. In this case today, in partnership with the Georgian Angel Network, we're inviting you to join the GAN Managing Director, Michael Badham, as he's going to walk you through what raising angel capital might look like. Through this conversation today, we're hoping you get a better understanding of what does accessing angel funding look like, what the perspectives of an angel investor is, what does it mean to become angel ready, and what would the perfect pitch sound like?
Well, thank you, Jesse and Mackenzie and Chris and everybody at the Sandbox for setting this up. My name is Michael Badham, and I'm the Managing Director of the Georgian Angel Network. And what I would like to do today is talk about what angel investors are looking for and just how you go about raising a seed round of capital. Now, as Jesse mentioned, we recorded this and it's in 3 parts on the Sandbox. So some of you may have seen this, some of you may have not. But what we thought we would do is I would just run through the slides very quickly and then open it up for Q&A. So I'll just power through this and we can revisit slides during the Q&A or whatever you would like to do. So the first thing you should understand is that there is a funding ecosystem that starts with the what we call the 4 F's, the founders, the family, friends, and the occasional fool. There are lots of accelerators and incubators and what are called regional investment centers or regional incubators all throughout Ontario. There's a whole set of government grants, IRAP, SHRED. There used to be Smart Start. There is a website that's managed quite well called fundingportal.com, which basically lists all government grants that are available. And then you get into angel networks, high net worth family offices. And then you get into early stage venture capital funds themselves, which then emerge into private equity funds, and eventually strategic investors. And what this looks like over the life cycle of a business is that your business starts off and over time, and this would be size of your business on the y-axis, but you bump along on the bottom being funded by family, friends, and then you move into angel investors, angel networks, government support, and the incubators. And then something happens, something clicks in somewhere around here, and you get yourself ready for venture capital funding. And then you enter this, with the venture capital funding, you enter very, very high growth until you become attractive to the private equity world and ultimately to large strategic investors or perhaps even public markets. What's interesting about this timeline is that the time period from 0 to A could be as long as 5 years. And so angel investors come in generally when you're angel ready, and I'll talk a little bit about what that means, but in the kind of 3 to 5 year period. The period between A and B is probably another 18 months to 2 years, maybe longer, and the period from B to C might be another 3 to 5 years. So when you look at this whole time frame, you're really looking at what looks like 10 years. And even the massive success stories like Uber, they started the idea about 2008. They did their angel round of funding in 2010 and went public in 2019, early 2019. So, and they did something like 17 rounds of financing throughout that period. So don't ever think that this is kind of like a one-off deal. I think fundraising and raising the capital you need is a core competence of an entrepreneur. So when we talk about angel investors, who are these people? And as I mentioned, Georgian Angel Network is one of the 13 registered angel networks in Ontario. There are 4 or 5 big ones in Ontario, the Angel One, Maple Leaf Angels, York Angels, Golden Triangle. These all have 100+ members. Georgian Angels, we're a smaller, kinder, gentler group with about 35 members. We basically consist of accredited investors, which is a technical term, which allows you, the security regulators allow you to make investments in a third-party private company. These rules were designed to protect people from going and squeezing money out of people who shouldn't be investing in angel investments, and essentially they're investor protection laws. So what you've got are successful business owners. You've got caring, thoughtful people who enjoy investing. They enjoy the investment process. Obviously, they enjoy earning a return on their capital and the effort they put into it. And so it's a mix of people who, and I would generally say the Georgian Angels are generally people who care about the community, care about making investments, and are intellectually stimulated by the investment process. I think the best way of describing what we're looking for is to use the horse race analogy. Essentially, we're looking for a jockey, a horse, a race plan, and a large purse. We think about the jockey, we're thinking about somebody that is hungry, it's mentorable, energetic, smart. But more importantly, if you know anything about the equestrian sports, there is an emotional tie between the jockey and the horse. And so we are looking for a jockey who has a deep understanding of the horse. And I would say finally, and we'll touch on this a little bit towards the end again, we are looking for founders who actually respect the investors. And I'll touch on that later. The horse, this is the product itself. We're looking for product market fit as evidenced by sales and sales growth and good customer feedback. We're looking for a strong team. Now we get into the race plan, and I can assure you in the Kentucky Derby that the jockey and the horse have practiced racing on this course 1,000 times. They know that there are approximately 5,000 steps in that track, and they've practiced each and every one of those steps and what's going to happen if somebody cuts them off. Are they going to be on the outside, the inside? They've thought about everything. So when angels are looking for opportunities, they look at what is the race plan? What's the use of the proceeds? What's the next funding? What are the milestones? And I would say more and more, I view angel investing as a relay race where we're taking the baton from the 4Fs, the family and the founders, and we want to pass that baton over to the early stage VCs. Do I care whether you're going public or be sold to a strategic? Not nearly as much as I care about what the early stage VC is looking for. So we always look at what the next round of funding will look like, and do we have a good enough plan that's well enough financed to get the company to that next stage? And of course, if we're going to put all this effort into it, we don't really want to race at an unknown racetrack. We really want to be racing in the Kentucky Derby. So size and potential return, very, very important to angel investors. There are lots of flavors of capital that you can start with: government support, tax credits, grants, loans, and sometimes parallel sidecar investment. There is debt that founders will start with credit cards. They'll get into leases. They might actually get a small bank loan, term loan, a mortgage. But really, at the early stages of investment, it's going to be through common shares, preferred shares, options, and warrants. And that's the language of angel investing. Lots of people want to talk about valuation, and we've got to be very careful about the use of language here. But founders will value their business at a particular level in order to avoid dilution in the future. And again, I talked about these rounds of financing, because with each round of financing, founders will get diluted. And so it's important that founders start off with a reasonably high valuation as a benchmark. It's not really the value of the business. It's very hypothetical, in order to negotiate a price at which the investors will come into the business. And that price could be based on different milestones such as an agreed-upon valuation cap on conversion of a note. And I don't want to get into all the details as to how these are structured, but it's important to realize that even though the business has no revenue and only has a product in beta, that it is important that, and the angels do recognize that there is value there. And so typically what we see is founders coming to Georgian Angel Network with a valuation of $2 million, of which we're going to put in something that looks like $300,000 to $500,000 for a percentage of the business. Once founders come to us with valuations that are over the $4 million mark, there has to be strong justification for why they believe that that investment, their company's worth that much. And if you think about what angel investors are looking for in terms of return, people often pull out the old line, well, angel investors are looking for a 10 times return. That is, if they put in $25,000, they'd like to earn $250,000 3 to 5 years later. You know, that's interesting and it fits a certain model, but it's not what gets angel investors excited. And again, it's a competitive world for angel investment. And so you really want to be, present the biggest possible opportunity. So if you think your business can get to a $100 million valuation and the angels come in at 2 million, that's a 50x return on their money. That's significant. But if you come in at a $10 million valuation, then getting to 100 million only gets you a 10x valuation. And that might get a lot more money for the founder, but it doesn't get the angels interested. And it comes back to this issue of having respect for the investors and respect for the fact that they are entitled to earn an outrageously high return for the risk that they're taking. So the whole valuation discussion, to summarize, is really about an allocation of the value between the founders and the investors. So what's the process? And simply, you're going to develop some kind of minimally viable product, and you're going to be able to demonstrate its value to customers. You're going to enroll in an accelerator program. You're going to build a team of advisors and colleagues, and you're going to win some government grants, some customer awards, and some recognition in the marketplace. Essentially, that's step one. If you come to GAN and say, I've got an idea, will you fund me through step one? The answer is no. You know, we will come to you in step three, right, on this process. The second step, number two, is you have to commit to the project. We often see founders who are working on their project as kind of a side hack. No side hacks. The founder has to be living or dying by the project. And you have to become, in a sense, a CEO, as well as the artisan or the developer or whatever you refer to yourself. And I think of it as you're working in the business, developing the product, but you also have to be able to sit and change hats and become the CEO and work on the business. So I distinguish quite clearly between working in the business and working on the business. So once you've got those two parts built, now you can start finding a lead investor through networking, and you're going to hit the trail with some angel-ready tools. You will hear the expression angel-ready quite a bit. And basically, my role at Georgian Angel Network is to screen the opportunities and get to the two best opportunities that will be presented to our members at our monthly investment meetings. Typically, I look at 15 to 20 different opportunities a month. I can tell you that the first 10 are nowhere near being angel ready. And the next kind of 5 to 10 are in various stages of being angel ready. Clearly, and I can go into more detail in the Q&A, when we get a referral from one of the other angel networks, the opportunity is very much angel ready, and it's easy for us to look at it. When we think it can be angel ready, in maybe 6 to 8 months. We've set up a separate fund, and you can go onto our website and see what we refer to as the GAN Accelerate Fund, or the GXF. And this is a fund that enables us to invest $30,000 in companies that are not angel ready yet, but could be within 6 months. And it allows us the opportunity to work with companies and get to know them better, get to know the founders. And it's a bit of a feeder system for us. The next few things I'm going to talk about, and that is the product market fit, the governance, legal data room, and the financial plan. One of the things I ask you to think about throughout this is that it's more than ticking off the boxes. You can say, yeah, we've got product market fit. I got 3 customers. Well, that's not really the level of detail that we're in. I'm going to talk about a lot of detail, but this isn't about checking the boxes. This is about understanding that as the angel investors, we're going to assess each and every characteristic in an awful lot of detail. And so your status, your situation on each of these 3 areas needs to be fairly robust. I think when we talk about product market fit, this is by far the most important issue for angel investors. And interestingly, it's the hardest part for angel investors to assess. The angel investors are very interested in new ideas, very interested in transformational products and services, really like technology, like new ideas, but it's very, very hard for angel investors to determine, will customers actually buy your product? And so oddly enough, and a lot of people don't really understand this, there has to be sales and actually recurring sales and sales growth are actually the most important part of assessing product market fit. That being said, a description of the customer value, evidence that you've actually completed market research, you've got a clearly addressable market, you've got a defined business model. All of these things are really important, and there is a complete and accurate competitive analysis. I see so many of these charts that lay out the competitors in the columns and 5 or 6 criteria down the side with tick marks under your product and X's in everybody else's. And I often say, if I took this list to the competitor, what would the competitor say? And more than likely they would change the criteria so that they had tick boxes in theirs and yours had X's. And that's the kind of detailed competitive analysis we're looking for. In the terms of data room, governance, and legal, this is all pretty straightforward stuff. Again, you've got to have a strong foundation with all of the details looked after. Admittedly, some of this stuff can be quite expensive, but in our ecosystem in Barrie Simcoe, there are lots of ways in which you can get help building all of this. And perhaps the most important thing is to register in an innovation center, whether it's the Georgian College's Henry Bernick Center, the Innisville Accelerator, the Collingwood Accelerator. And we also have strong relationships with Venture Lab and Innovation Guelph. So we would strongly encourage everybody to be part of that. Finally, the financial plan, my favorite place. You've got to demonstrate an ability to secure government funding. You've got to understand your burn rate, the key milestones, what the forward-looking financing plan looks like, your cap table, use of funds, and you've got to be able to demonstrate that the funds you've raised to date, you've actually deployed carefully and effectively. I mentioned realistic valuation expectations and deal terms. We often work with founders to get them there, and a growth plan with milestones. And I mentioned the 40x on this slide. People talk about a 10x valuation, and that, as I said, that's interesting, but it's not. It doesn't drive enthusiasm for your project. Again, these are big spreadsheets with lots of information, and we would expect you to have all of this stuff laid out in order to meet the angel ready bar. Got all those things? Final piece is to put together what I call the perfect pitch. There's lots and lots of information out there on pitching to angels. My favorite one is one that was done, I'm going to say 15 years ago, by David Rose, who is a well-known New York angel investor. He has a YouTube video on this, and I just keep pushing people back to this 15-year-old video. It's basic. He does it really well. I think it's like 12 or 15 minutes long. He's succinct. He's direct. It's on point. With your pitch, you need a basic information kit, a one-page summary, your term sheet, a pitch deck, both maybe a short version and a long version, and you need your financial plan. That's the basic sales kit that you're going to visit investors with. A lot of people talk about the narrative and the story in angel investing as being very, very important, and I would agree with that. The most important thing you can do in this is actually describe the customer problem. Even as late as last week, I was looking at really interesting opportunities where they started by talking about their product. And the reason people do that, interestingly, is because their product doesn't really solve a problem. It's kind of interesting and it might be useful, but it's kind of like taking vitamins every morning. I know I need to, and they probably make a difference, but it's not solving any problem that I have. If I've got an excruciating back pain, like I'm not looking for Advil, I'm looking for an opioid. That's how bad the pain is. So when we look at customer problems, we're looking for that excruciating back pain where your solution is the equivalent of an opioid. It's dangerously addictive and will definitely solve the problem. And so number one and number two, that part of your narrative has to be crystal clear. The rest of this, interestingly, from my perspective, defines what I call the business. And many pitches come to us, again, with a great product, but they haven't really defined what business they're in, what their mission vision is, who their team is, how they're going to grow, the competition they're going to face, the strategic issues they're going to face. Got a great little product, great little idea, but there's no sense that it's a business per se. And this is where I distinguish between being an artisan and running a business. Yeah, you know, I could be the world's best accountant, and people can hire me to be an accountant, and I love doing accounting and bookkeeping, and that's real fun, but that's not a business. A business is when I say, you know what, I got to figure out how to hire 1,000 accountants and compete with the big dogs in the industry. I've got to figure out how to do this completely differently. That's the difference between wearing your operator founder hat and putting on your CEO hat. And the rest of that narrative is really going to be assessed. We're really using it to assess your ability to become a CEO. So with all of that, and you get all of that done at the end, and just before you come into our GAN meeting, I'm going to talk to you about 3 things that I want you to really care about. And I want you to care about what is really the value of an angel investor to you. Is it just the money that you're looking for, or is there something more that you're looking for? And I really want you to think about that. I want you also to think about what kind of leader are you? And in other seminars that I do in this area, I often put the 4 lead characters from Game of Thrones on a slide. And I ask you to decide whether you're a Daenerys or a Jon Snow, and what their different leadership styles were all about. And so again, it's worth thinking about what kind of leader you are and you want to be, and how you're going to get there. And finally, I need you to care a little bit about why, as investors, we should care. What is it about your opportunity that we should care about? And it's interesting because while the knee-jerk reaction will always be, well, you should care because you're going to get a 40x return, but I can tell you only 1 in 20 is going to hit that benchmark. And so there have to be other things that you want us to care about, that we will care about. And so I'm going to end with this last slide. Raising capital is really, really hard. You've got to exceed all expectations at every step of the way. you are going to stare the bull down, and you have to be prepared to address your customers, your investors, your employees, your key suppliers. Your job as the CEO is going to be to exceed the expectations of all of the stakeholders of your business, and that is hugely demanding. And so if this picture resonates with you, you're on the right path. If this picture scares you, you need to take a hard look at what it is you're doing and how you're going to succeed. And so I would just add by saying, and we know this in these COVID-19 times, we know this more than ever, but optimism and your ability to be incredibly optimistic through this journey takes real courage. And if you've got it, we'd love to, and you're angel ready, we'd love to see you. So with that, Jesse, back to you, and I'm happy to take questions.
Absolutely. Thank you, Michael. I'll start with, are there sector or other constraints in terms of applying for angel funding?
So when people talk about sectors, they often say, well, do you like agriculture or food or high tech or, what sector do you want? Our answer is we're looking for transformational products and services. Our sector is transformation. And that transformation could be disrupting the way you ride a taxi. It could be that you're producing a gluten-free pasta or a nut-free Nutella. It doesn't, our definition of transformation is fairly broad, but your product has to be transformational. For instance, we don't do new flavors of alcohol. We don't do cannabis. This is just boring stuff, to be honest. And what we're really looking for is somebody that has said, you know what, there's a new way that we can bring your services to the customers in a way that will just make the customers thrilled and add all kinds of value, and will take costs out of the system. Whatever that is, it has to be transformational.
I have a couple of specific sectors here, so I'll just throw these ones in there. And perhaps, Michael, you can speak to what you may have already seen in the space, or if you know of a specific area of transformation within the space. So space number one is raising capital for real estate investing.
It's not something we do.
Okay.
I know some of the other angel groups do that, particularly Northern Ontario Angels. They do a fair bit of real estate projects. We do not do that. There is a great strong population of real estate developers in the Barrie Simcoe area. I would just point you in that direction. You can't get the kind of returns we're looking for with the enthusiasm that real estate presents. So there are people very specific in that sector. So you're better to go there.
Perfect. We'll make note of some of those in the chat as well. The Northern Ontario Angels was one of the ones you mentioned in relation to angels.
But they won't invest in real estate outside of Northern Ontario.
Okay.
It's a very local thing. As far as
next one I have for you, sir, is we have Angie Ricci from Angel Tours and Entertainment. She created an app to address driver shortage problems within the transportation industry that have gone back over a decade. COVID-19 has created a new opportunity with the increased demand in the supply chain. The app is almost completed, but we need budget for legal and marketing. Is this something that falls into GAN, or would you have a direction you might offer, Angie?
So a bunch of things. We've looked at all kinds of apps in general, but specifically apps which match people to jobs. And there are all kinds of job boards in the world. Various people have different feature sets which deal specifically with particular industries. And it's not been something that we've had 3 or 4 people in the last 3 years come through with these kinds of solution sets. And they've never really been able to demonstrate that they had a business. They might have had some interesting features, but their ability to attract, in your case, many drivers and many companies looking for drivers has turned out to be a bigger problem than most people estimate. The way, just think about yourself. Nobody wants to add a new app to their phone. Like it's just done. And so how you convince a driver to put this app on and visit it regularly is the business challenge. Would we look at it? Of course we would. It's transformational. It's technology. It's clearly solving a need. Is it a real pain, or is it a nice to have pain? And there are lots of people in the industry. So there are, I mean, we've got some people who are familiar with the trucking and transportation industry in our group. So it is something that we would look at. But if you don't have an MVP that's out there, it's probably still too early. And we don't spend money on legal, so marketing, yes.
And then I have a question about the due diligence processes and typical areas of concern within kind of that due diligence piece.
So that's a good question. And I think that's why the Angel Ready criteria has the governance and the data room. If you just imagine what would happen, you pitch at Georgian Angels on a Thursday night. We get back to you on Friday or Monday and tell you how many people are interested. We set up a phone call on the following, call it Wednesday or Thursday, with the people that are interested, and they're asking a whole bunch of follow-up questions, and we're thinking about due diligence. If you were to say, I don't have a data room that's ready, give me 2 weeks, you lose all momentum. But if you say, as we're arranging the meeting on the Monday, oh, here's a link to the data room, before people come on the call on Wednesday or Thursday, let them go through the data room and see everything. There's much more momentum being built. So being ready for due diligence by having a solid data room is critical in building momentum. There's all kinds of checklists as to what to include in there, but generally think everything. Like there's nothing that shouldn't be in there. Absolutely every document you have, every spreadsheet you're using, every piece of your business should be in there. The level of due diligence that we do depends on whether GAN investors are leading the financing or we're following. Remember, in part of the presentation, I said often opportunities come to us from other angel networks. That's when we're following. We rely on their due diligence. They generally send us their due diligence memos and documents, and our members will rely on that. If we're leading, then yes, we actually go and do quite a bit of due diligence. And depending on the situation, we might actually hire somebody to write a due diligence report for us and do some of the heavy lifting with respect to reviewing detailed documents and generating issues and questions for us. So you can think of that as being quite detailed. A lot of people sometimes believe that somehow this is going to be painful. Again, I would say our investors are kinder and gentler and are going to treat you with a huge amount of respect, and will always be polite with respect to the issues that they're raising, but it will be a very in-depth process. Don't underestimate that, and don't be afraid of it. If you've done your homework, as a founder, you should enjoy the process.
And I guess piggybacking on that one, a question that's come in is, as an angel, how much of your current outstanding interest is typically convertible versus equity?
There are 3 or 4 typical angel forms. I'll just use it, a form of investment. And the most popular would be a convertible note. And that's a piece of debt that converts into equity at some rate, usually and it usually converts at your next what's called priced round of share issue. But that convertible debt would be the most common. Often we'll just do a straight equity deal. In the US, they have what's called a SAFE, or a simple agreement for equity. We don't do those in Ontario very often, and again, we don't do them at all. If you're going to put the effort into it, let's get a proper agreement, either a convertible note or or straight equity subscription. There is a preferred share structure that the York Angels have developed over the years, which is kind of like a hybrid between an equity issue and a convertible note. It's a lot more pages long. It's got a lot of detail in it, but it's essentially a common share that has a liquidity preference, if you understand what that means. We don't like them because they're too complicated. We like the convertible note because it's straightforward and everybody understands it, and it pushes the valuation discussion down the timeline a little bit.
What is the investment range typically of either the Georgian Angels or an angel network? Do they vary network to network?
Yeah, that's a good question. So let me start by saying typically an angel investment round is somewhere between $500 and $1 million. When angels come to us with smaller rounds, where we get concerned that there isn't enough money to, again, pass that baton from the founders over to the early stage VCs. And generally, founders are using the smaller round because they fear dilution and they're somehow trying to maximize their own return. And again, that plays into the issue of respecting your investors and all of that sort of stuff. So we have to be careful because no investor wants to be the last money in. You don't want to be the person who puts the last $100,000 in and then the business fails. So you always have to make sure that there's enough business to get it to the next financing. If you think about a $500,000 round to $1 million, and you think that the typical angel investor puts in $25,000 to $50,000, then the math becomes sort of straightforward. And typically, and again, if you think of GAN as a smaller group, some of the larger groups that have over 100 people, and in fact, the three biggest ones, Angel One, G10, and Southwestern Ontario, have pooled together to create what's called equation investors. And if you win a slot to present to equation, you actually get to go to all three of those within a 24-hour period. So you could actually be pitching as many as 300 investors over 24 hours. That probably gets you $500,000 to $700,000 in fundraising. If you come to GAN, we're typically good for $150,000 to $200,000. And so if you're looking for 500, then we're going to walk you down the street to Peterborough or Oshawa or Niagara and get you an introduction at one of our smaller angel networks that will help. And that's why I say sometimes they come to us and say, will you fill around? We just saw a presentation on Tuesday where they were looking for 700. They've raised 650. They're basically looking for another 50. They could close at 650, close enough. But if we gave them 100 and they were up to 750, that much better. And so it's an easy consideration for us. All the work is done and we're basically filling it or topping it up.
And piggyback on that one is really quick. Is the investor pool all Canadian?
The members of GAN, the members of Angel Ontario, I would say all, probably out of 1,800 angel investors in the Ontario Angel Network, I'm sure there's 2 or 3 that are American citizens residing in Canada. But yeah, we generally represent Ontario-based angels. The US market is state by state, very active angel investing in the US, obviously. In Canada, there's an active group in Quebec, Ange Quebec. It's the equivalent of taking all 13 angel networks in Ontario and combining it into one mothership. That's what Ange Quebec does. In Alberta, there's 3. In Vancouver, it's a little more broken up because the government doesn't provide any support to the angel networks in Vancouver. What they do is they provide a tax credit to individual angel investors. And what that's created is a very fragmented ecosystem. While it sounds good if you're an angel investor, you'd love to get that tax credit, it actually is not good for the ecosystem. So you'll find that on a per capita basis, or however you want to measure it, angels in Ontario invest a lot of money. I think last year if I recall the number, $66 million put into 750 different companies. I think that's right. Very, very active. Georgian Angel Networks, to give you another benchmark, was founded in 2012. Again, small group, 30-ish people through the years. But Georgian Angel members have invested just over $17 million in 55 different companies. We invest on average about $1.8 million per year in about 12 to 15 companies. A mix of new names and follow-on investments.
If I was starting out today and I had my business idea, what are the steps that I would logically look to take in order to get to MVP to be available for angel funding?
Well, I think the first step you do is you join an accelerator or an incubator. And then I think the second step you'd take is you'd build the product to test, because you need it to take to the market in some way to test it with customers. In order to do any of your market research, you've got to take them something. And so what most people do is they operate a skunk works for a couple of years, building their product, and always with the market in mind. But you've got to have something to test. So I would join an incubator, accelerator, or a HBEC program, and I build the MVP.
This next question is a little more, we're going to flip it here, a little more interesting. So the question is, what are the current struggles of angel investors due to COVID?
So good question. And I was just quoted in a Beta Kit article interviewed about this. It's been kind of interesting. So again, if you think about a typical accredited investor, so I didn't, bog down into the details of what that means. But again, I give you this information because if you're a founder looking for an investment, understanding who your investors are, understanding the struggles they have is just like, treat an investor like your most important customer. You've got to understand everything that your customer is thinking when you talk to them. So if you think about a typical accredited investor, they're going to be in one of three buckets. They're going to be a successful professional, lawyer, doctor, with solid income and good net worth and an active investment portfolio. But COVID comes along and they're concerned about their own business. I mean, they're just laser focused on their professional business. And if you're like a friend of mine, an orthopedic surgeon, and all optional or elective surgeries have been canceled and nobody's getting in car accidents because nobody's leaving the house, you're kind of out of business. And so it's odd to think of a doctor as being out of business, but if you're a dentist, you're out of business. And there are a lot of good dentists who are great angel investors. And so they're thinking, I got to pay rent. I got to pay my staff. I got to stay alive. That's one group. Second group are actually just high net worth individuals. And, if you just think of what that means, maybe they've got maybe they've got $5 million worth of liquid investments in the stock market. And let's say it was $5 million on February 12th. By the time March 31st rolled around, they didn't have 5 million anymore. They had 3 million. And depending on the mix of their portfolio and how defensive they were and how much they realized that February 12th was a peak and they should have been selling, who knows what their status is, but most angel investors took a big hit. And so for the period from March 12th through to, I would say, the middle of May, they were 2 months, they were mostly concerned about their own portfolios and the idea that they would make new investments in angel new names, very difficult. They were likely more concerned about the survival of their existing angel investment portfolio and will there be need to support the existing group. And then, there's a group, the third group, neither have businesses that they're operating nor $3 million, but they've actually got significant equity And you know what? They're just going to roll with it and keep going. And so we've seen mixed results with our membership. And I think there's still strong, when I poll people, there's still strong appetite to be an angel investor. Maybe not this month, maybe next month. Maybe we'll just be a little bit more careful for the next little while. But, you know, we've had good turnout in the 3 meetings we've had since the pandemic was declared. You know, I think 3 of the 6 companies presented will get funding. So I think we'll be okay.
In relation to the pandemic itself, would you see, from an angel investment perspective, will you see the need for an added contingency in relation to the partnership that you would have with the business moving forward, having gone through this experience? Is that something that might be bolted in or built on? If a pandemic strikes in the middle of my investment, this will be something that happens. Is that something you guys have talked about?
Going forward, I think everybody is going to be more concerned about risk management. I think that, you know, risk management within a business gets, you know, cursory consideration. But I think going forward, people will evaluate risks as being much more likely to happen. We're living in very volatile times right now, and I think people, you know, don't really appreciate or get a little bit sleepy with respect to real risks. I mean, we've been aware of a pandemic risk since SARS, and you know, shame on us for not being prepared properly. You know, if you think about, you know, the next year with the second wave of pandemic coming through in the fall. This is supposed to be a particularly bad hurricane season on the eastern seaboard. You know, did I just go out and buy a new home generator for the house? Absolutely, because the last thing I want to be is stuck at home with no electricity, right? And no ability to travel and no ability to go anywhere, and I'm not going to move into a hotel. Like, I mean, I think I think defensive strategies are what people are thinking about. Now, that being said, Jesse, you know, there are a lot of great success stories that are out there right now, and I just want to tell maybe one quick little story if I've got time. You know, a friend of mine had a small retail plant and flower shop in downtown Toronto. And he started this business 2 years ago, had one little location, maybe 1,000 square feet, 1,200 square feet. And, you know, he didn't have a payroll. He paid everybody under the table. They gave him maybe invoices from time to time. But he, you know, on a good month in the past 2 years, he would have done $40,000 in plant sales. So we're thinking succulents and potted plants, plants for the home, that kind of thing. Not a gift flower shop per se, but more like a plant store. COVID hits. He's not an essential service. He can't apply for any government grants because he's never had a payroll. This was, you know, CRA's way of getting back at the underground economy, which, you know, in my view is what I would describe as an unintended consequence of letting bureaucrats set your policy somehow. Anyway, he ends up shutting down. Another friend of mine goes over to him and says, you know what, you should go online. And he gives him 50 reasons why he can't. But he says, look, we're going to, and they resolve that the flower plant store operator is going to take photographs of every plant they have. My other friend says, I'm going to set you up on a Shopify account. And so over a 2-week period, and I kid you not, 14 days, they set up an online plant business. And they go live on Thursday at 5 p.m. And by Friday at 5 p.m., they've sold out the shop 100%. He sold out his inventory completely, $20,000 of sales in a 24-hour period. So they run around, and it's all curbside delivery on Queen Street where there's no curb. There's no, like, they were screaming, well, we can't do this, we can't do that. We just said to them, you know what? When the customer drives by, you just stand on Queen Street and throw the plant in their trunk and move on. And so they spent all day Saturday and Sunday effecting that delivery. On the street wasn't as busy, in COVID as it has been, and they were able to do that. Long story short, in the last month, the last 30 days, they've done $100,000 of business through the online plant store with curbside delivery. Remember, his biggest month ever was $40,000. They're projecting June to be $150,000. And what did they do? So I said they went on and they created a Shopify account, but they did more than that. They actively managed it. They actively engaged with their customers. They moved, the one guy spends literally all day, 12 to 14 hours after they announced the sale, managing the site, moving featured items around, moving prices, watching what people are putting in their carts, sending them little messages saying, hey, I like that choice. I love that pot. That's my favorite flower. If you have any trouble, just engaging with their customer in an online way. They didn't just put it up on Shopify and walk away from it and say, we're not getting it. They actively engaged with their customers, and in a new way, just the way Sandbox is actively engaging with its customers online. And when I see that kind of resilience and courage in a founder, I want to back them, right? And so I think that's when we see opportunities in the market right now, that's what we're looking for.
What is the process for somebody who may believe that they are at that angel ready stage to engage the Georgian Angel Network?
Just go onto our website and get my email and send me an email.
All right, so we'll share that out as well with all the attendees we've had today. Thank you again, Michael Badham, Managing Director of the Georgian Angel Network. And you can look to our website for today's recordings and Michael's recordings on the session. And you'll also be able to find contact for Michael and the GAN website as well.